Hello, this is Will from JourneyWallStreet.blogspot.com. I'm here for the trade reviews for trades made on June 21st, 2012. So as you can see, I had a pretty nice day. It's been a while since I had a day like this. Well, it felt like a while, and I've also felt like I should have had a much better day too. There was plenty of opportunity there, but I think I need to really learn how to aggressively size correctly on days like today. With that said, let's go to the trades. So one of the first trades I was in BBBY, and as I read on Twitter, Bloodbath and Beyond, because it just got absolutely crushed last after earnings. So the first trades, I should lead off by saying I woke up late today, so I missed a lot of the opening trades, which probably would have been pretty awesome. I mean, this kind of a pullback play here, not necessarily close to the EMAs, but that's doable. This type of play here was also very tradable, but I was in on this play. So let's go start there. Very simple play. Pull back into the EMAs and short the tail and short the low. I was able to cover I believe around right here, just because it was somewhat of a point of reference for me. And then I also made another trade here. I was waiting for this to kind of either test the 21 EMAs and make a tail, or once it broke this low. So this is sort of where I kind of screwed myself up mentally. So because I knew that if I took this short, my risk is 30 cents, so I was only in for tier 1. As this thing was happening, I noticed that 70 was really holding the bid. Ton of buying done at 70. So at that time, I should have been thinking, if 70 drops, because stocks just don't trade down 15% and up right away, especially if all the declining EMAs are happening. The most likely thing that was going to happen was 70 was going to drop. So even if I shorted another 1,000 shares, I'm only risking maybe $30 at that point, because 70 or close to 70 would be my entry and 71 would be my out. But instead of doing that, I kind of did nothing. I just stuck with whatever the 100 shares I had here, and I let this just trade along nicely, and I didn't really think about how am I going to aggressively add or anything like that. I just kind of coasted from this point. So that was not a good move on my part. I mean, I could have really took advantage of this move, but I didn't. So eventually I ended up covering, what did I end up covering at? 62.30s, just because it was kind of the retracement of this area. And the reason I did that was because I saw something on the tape. I saw that someone was hitting the offers for at 30 cents, 31 cents, and it was just getting hit like crazy. So I thought, dude, someone's buying, and it might have found support around this area and shoot back up. So I let the ticks kind of dictate what I dictate my trade, but I shouldn't have paid attention to the ticks. I should have just used the EMAs and used this downtrend as a way of just staying with the trade. But after I covered, that was that. Though it did offer more opportunities there, and also right there, I wasn't around to take these trades. It was still a pretty decent trade, but like I said, there's so much opportunity here, here, that oh, then don't forget here and here that I really should have been a lot more aggressive with this stock and really make better decisions with what I was doing. So I kind of let this slip. My next trade was in KMX. Pretty similar in terms of the weakness of the stock. Oop, what was that? Okay. I was watching kind of this pullback into the EMAs. I mean, make it blow it up a little bit. And so I was kind of waiting for two things. I was waiting for a topping tail. Ideally, I was hoping that this wouldn't trade higher. I was hoping that it would trade lower than this green tail here. So if it did have that tail that was lower than this green one, then I would have been able to hit that short with a lot of size, knowing that my risk is going to be so small. But instead, I had to take the second entry, which was below this break, which was below this entry bar. So that was about 8 cents risk. So I was only in tier 1-ish, and that's another mistake because I was so passive on these trades, even though today was a day to get aggressive, but I wasn't. So I was only in tier 1-ish, and basically I just covered on the way down. I covered down here, I covered down here for some, and finally down here. I was using the fib retracements on this, and that seemed to work pretty well. The fib extensions. I kind of did that, and did that. So kind of around there, and kind of around there was my covers. I tried to trade this again. After it broke through here, I tried to get short below these EMAs, but it didn't work and I got stopped out. But I still kept watching it, and I noticed that it's still hugging below the EMA, so I got short again here, and I kind of got short again down here, which was kind of a break below the previous entry point that I had, and I just let the trade kind of work itself out, and finally I was able to cover like right here and right here because I had to go to work. I could have gotten a lot more out of this. Actually, no, it wasn't that good. It was right here was one, and down here was one. Yeah, right there and right there was my covers. I think I could have got a lot more out of this trade, but on one hand I had to go to work, and on the other hand I just wasn't aggressive enough in these trades. I mean, I was in tier 1 most of the time, and these were really awesome trades. I mean, awesome setups, but tier 1. It makes no sense. I really need to think about my tiering a lot more, because I'm like I said, I keep saying it, but I'm missing out on some of these opportunities. Anyways, next trade was in the spies. This one I missed out on a lot too. So I noticed that EMA again. It's always going to be EMAs. That these were the high wicks. So I kind of shorted around here and a little bit down there when it broke that entry bar low. Actually, no, a little bit down down there when it broke this entry bar, not here. And I got stopped out above this, but I did not re-enter. I should have re-entered, but I didn't. But eventually I did re-enter later on in the day. So this was a tier 1-ish, tier 2-ish loss, because I entered at the wick, and then I entered on the entry bar. So, the trade that I failed on initially, I was sized correctly, whereas all the other trades I was not. I think that's really the advantage of having this tail. It gives me another way to get in quickly to tier 1, and then the break would be tier 2, whereas on the other trades I didn't have the tails. So I could only have done the tier 1. I think that was a big thing about it. So that's just something I need to work on later. But anyhow, I eventually got back into this trade because of the pretty much the same reasons. It was 34.50, so it was this pullback here. So as you can see, the tail, another kind of a tail thing here. So I try to offer within the tail, but I couldn't get filled on it, so I offered below the entry bar. My stop here, it was about 10-cent risk, and I shorted 300 shares. So again, tier 1, because it was just this entry. But I used my fib retracements on this. Sorry, I keep saying fib retracement, but fib extensions, and I believe I used these. No, it was definitely this. I used something like this, and I covered some at this first area, this second area, and then finally this third area, and that was my trade. Boom, 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 and I was off to work. Had I not been at work, then what about this? What about this short? What about this short? What about this short? This was a day to get big. This was a day to be really aggressive on the shorts, and plenty of opportunity, and I was only able to capitalize off of a very small portion of it. But it is what it is. Finally, BIDU. This trade happened in the afternoon, and I wasn't necessarily looking for a stock to trade. I was just kind of browsing around, and I kind of noticed that BIDU was a little bit of a pullback here. Actually, I was looking at the 15 at that time. But yeah, a little bit of a pullback there. Pretty tight consolidation range. And I was looking at the wicks, and I saw, okay, 115.11 was the high. So if I were to get in, my stop would be 115.12. So I would try to get in as close to 115.12 as possible, and I ended up getting filled at 115 exactly. So again, I was only in tier 1, so it was this case it was about a $36 risk, and this would have been a nice entry point to because it's kind of consolidating here, and if you look at the 15-minute, or actually the 30-minute, then I was told that that was also an inside bar entry. So if you kind of back it up a little, then it kind of looks like a bear flag entry too. And would I have made my measure move? Yeah, easily would have made the measure move. But anyways, I wasn't looking at it like that, unfortunately. I was looking at it as a, get rid of some of these lines. I was looking at it as I'll cover some. I was thinking about covering some at the low of the day at the time, but just the way that the whole market is, I decided not to. I decided that there's a chance that I might break below there. And right here, it kept bouncing off. It kept bouncing off 11420. Boom, boom, boom. So I covered some at this push. I covered some at this push. And finally, I covered my last lot right at this candle. Right at that candle. And right after I covered, then that's when it made its next leg down. So, I'm proud to say I was the catalyst that was holding the stock above 114.20 because as soon as I got out, the stock tanked. But now that I'm reviewing the stock, I should have seen this. I should have seen this nice bear flag, and it would have gave me the measure move. I should have been thinking bigger picture versus my little tiny window of opportunity. And that pretty much sums up the day. I'm able to make a pretty decent amount of money on these trades, but I didn't see the bigger picture. I wasn't sized correctly. I wasn't aggressive enough. I didn't put everything together, and I've kind of just coasted. So imagine how great of a day I would have had if I were to attack each one of these potential trades, as a fully thought out plan and things like that. I mean, they are three really easy trades to make, and now that I'm able to do some analysis on it, it's four really easy trades to make, and upon further analysis, it's four rather huge and glaring mistakes, even though I was able to make a profit. So overall, I cannot be too hard on myself, but I just need to be more aware next time, because opportunity like what we had today doesn't come very often, and I really let this one slip away. Thank you for watching, and we'll see you tomorrow.